Welcome back. You tune into Market Fatafat, where we are getting you all the buzzers in trade today on the back of news floor and the back of technicals. Let's resume then. The first stock now is, of course, Zomato / Eternal now, the new name for Zomato. Now, that's reported its Q4 numbers. The stock is up 1.2%. Now, let's take a look at the numbers first and then what the brokerages have to say. First up, for the revenue, saw an uptick of 7.9% on a year-on-year basis to 5,833 crores. The net profit, however, declined 33% on a year-on-year basis. The EBITDA margin was also down 55.6%, coming in at 72 crores versus 162 crores, but the EBITDA margin was down 176 basis points. Now, according to Nuvama, they're maintaining a buy and they've revised the target price to 290 rupees from an earlier 300 rupees. So they've cut the target price there, but they're still maintaining a buy. They feel that Zomato has reported an inline set of numbers for Q4. The competitive intensity, though, remains high. The newly opened stores are currently underutilized and in bottom tier of the profitability curve. Also, the management expects competitive intensity to increase going ahead as other players enter into the category. Elara Capital also came out with a note that they're maintaining a buy and the target price is 300 rupees. Also, we had Karan Taurani who spoke about the results for Zomato. Let's go across and take a look at what he had to say about the results.
Mild negative reaction on these numbers, but as I said, we have to give it to Zomato for two factors here. One is they are expanding aggressively, even ahead of peers as far as expansion is concerned. They have got a larger market share ahead of peers as well. And despite all of this, their losses are extremely low as compared to peers. Plus, I think store addition will continue because they are making inroads in markets where they've been weak. Markets like South, where Swiggy is a market leader. Zomato is, Blinkit rather is aggressively expanding over there. So I think all these things are going to work in their favor. As far as quick commerce is concerned, we'll maintain our positive stance with Blinkit over an Instamart.
Okay, that's the word coming in on from Karan Tarani on Zomato, now Eternal. Let's shift focus to another earnings candidate. Let's talk about Bandhan Bank. That stock is not doing very well in today's trade on the back of a weak set of numbers coming in for Q4 FY25. Net interest income has come in at 2,750 crores, which is down 3.8% year on year. On a sequential basis, NIMs have also slipped to 6.7% compared to 6.9%. Advances are up 9.8% year on year. Deposits also looking good, roughly 12% uptick coming in on a year-on-year basis. What's concerning is the mixed asset quality we've seen. GNPA has come in at 4.71 compared to 4.68 sequentially. That has deteriorated. On the flip side, NNPA is absolutely flat at 1.28% on a sequential basis. On the back of this, let's understand what brokerages are making of these numbers. Macquarie has maintained an outperform with a target price of 220 rupees. Investec has maintained their sell rating, cut the target price. Rather, they've hiked the target price, to 155 compared to 145. Nomura maintains neutral with target price of 165. Nuvama hold rating with a target price of 160. And Motilal Oswal also maintains neutral with a target price of 170 rupees per share. So that's the brokerage roundup as well as earnings fine print for Bandhan Bank for Q4. But let's also go across and listen into the management who we managed to interact with earlier in the day, because guiding on the loan book growth, Partha Pratim Sen Gupta, the MD and CEO of Bandhan Bank, says that they are aiming for 15 to 16% growth. Let's go across and listen into what he had to tell us.
So we are targeting around 15% growth. So 15 to 16% growth. So both in our loan book, and we expect deposits to grow a little bit more than what we are expecting in the credit growth. So that is our internal guidance, and for which we are just working. And we have taken a strategy that the focus will be a little bit more on the secured portion. As you have already seen in the current year, our secured books have gone to 50%, 50.5% from 42%. And within the next year or another 2 years, we are aiming it at around 55%. So that is what we are looking at it. So we are more aiming towards a universal bank, and keeping that in mind, so we are concentrating on the retail, on the housing, on the wholesale banking, the commercial banking and others for that. So this is what we are looking for in the current year.
All right, moving moving on from one bank to another banking name, Federal Bank, that's come out with its Q4 numbers. Let's go across to my colleague Rabinder, who's getting us the report card for Federal Bank. Over to you, Rabinder.
Well, as Federal Bank is in focus, our company has reported its Q4 number, and company reported a net profit at rupees 1030 crore, which was up by approx 14% year-on-year basis. If we talk about NII, then bank reported a NII at rupees 2377 crore, which was up by 8.3% year-on-year basis, and the housing loan grew by 6.5% year-on-year basis. If we talk about advances, then advances growth was in line with the expectation, and there are also some brokerages note coming in where Investec has maintained their buy rating with target price of rupees 225. Nomura has given a buy call with target price of rupees 220, and MS has underweight call with target price of rupees 165. So back of this inline set of number, stock is down over 4%.
Okay, inline set, but stock not doing pretty well in today's trade. Federal Bank also aims to maintain and reduce NPA ratios. This is according to their management, Venkatraman Venkateshwaran, Group President and CFO at Federal Bank. Let's also go across and listen into what they have to say about the bank's growth targets and FY25 credit costs as well.
Credit cost for this quarter was 26 bips, and normalized for the full year, the credit cost was within the guidance which we gave at the beginning of the year. It is 38 bips. So it's within the 35 to 40 bips guidance which we gave. So this is now BAU in terms of provisioning norms. There'll be no change in that going forward. Our endeavor, of course, will be to ensure that the GNPA and NPA levels don't go up. And if you again look at our provision coverage ratio, this is not at the cost of the PCR. PCR has actually improved by about 425 bips as compared to last year. This year, PCR is 75% plus as compared to 71% last year. So we are making sure that we keep the coverage ratio as well, again, aligned to the best in class.
All right, that was the management of Federal Bank weighing in on the numbers. But let's get on board next techie, Aditya Agarwal, who's the head of research and investment at Invest for Edu. Hi, Aditya. Thank you so much for joining us today. Aditya, you have also picked out a banking name for us, IDFC First Bank. Tell us what you see for this bank on the charts.
Hi, Ankita. Good afternoon. Thanks, Amish. Always a pleasure. I think stock is poised for a higher level from here on. After a decent bit of a correction, stock has been making higher highs, higher lows after it had broken out from a falling channel pattern. And what is interesting is in the recent times, last few trading sessions, stock has entered into a consolidation phase. And today, stock is making an attempt to finally trade above its 200 DMA. So at current levels, I think one should definitely go ahead, look to add the stock in the portfolio, buy at current levels. For a trading bet, maybe look for a target of 69 to 70 on the upside. If somebody is looking to hold on to it for at least for a couple of quarters, I think 76 can also be seen in the stock. On the downside, I think 64 to about 63 is a good support area. Plus, RSI is trading above the 60 level, entered into the bull territory. So everything is going good for the stock. I think from here on, you should see much higher levels in the coming trading sessions.
All right, moving on then. Let's move on to the next counter, which is Jindal Steel. Let's see, that's also again an earnings candidate. Let's take a look at the numbers then. We did see the loss for Jindal Steel. That's coming at 304 crores versus 951 crores, which means that the loss has narrowed. Also, we saw the margins at 18.7% versus 18.1% on a year-on-year basis, and the adjusted EBITDA was also up to 2,482 crores versus 2,133 crore rupees. Also, we saw an uptick in revenue as well, which came in at 13,255 crores versus 11,700 crores on a year-on-year basis. And the back of this improved set of numbers coming in for Jindal Steel, that stock is up 0.7% in trade right now.
Focus. Let's move on now. Time for an ET Now exclusive. Air India has approached the government highlighting the potential additional expense from the closure of Pakistan's airspace. Sameer Dikshit is standing by with more details. Sameer, take it away and bring us the latest update on the aviation front.
So recently, the Ministry of Civil Aviation held an important meeting with the airline representative of those airlines which were impacted because of the Pakistan airspace closure. And recently, Air India has conveyed to the government that because of this airspace closure, if this prolongs for almost an year, then the Tata Group owned airline can incur an additional expense of somewhere around $600 million. That's a huge sum of money, and that is going to severely impact the financials of the airlines, not just Tata Group Air India, but the other airlines which operate to Europe, to America, or even to Canada, includes flights of Air India Express as well as flight of Indigo. So these airlines, they have approached the government to bring some sort of relief. Taking the lead, Air India has conveyed to the government that they can come up with a subsidy-based model that can provide some sort of additional financial support to the airlines which are impacted because of the Pakistan airspace closure. Not just this, we are also picking up from our sources that Ministry of Civil Aviation has asked the aviation regulator DGCA to come up with those sort of solutions that can provide immediate sort of relief to the airlines, to the impacted airlines. That might include the steps like the airlines can have a better rostering of the pilots and cabin crew, some sort of relaxation. When it comes to the deployment of the pilots, the first officer and the cabin crew, there some relaxation might be expected from the regulator DGCA. But yes, the airlines are impacted, and now they are looking that if the situation continues for a longer span of time, then the additional expense in terms of the fuel expense and the operational cost for the airlines, that is going to be a huge sum of money. And they are now looking, the impacted airlines are now looking that the government can provide some sort of either subsidy-based model, or they can provide some sort of alternate route where the impact can be mitigated or it can be reduced.
Okay, so that's the latest update coming in on that front. Samir, thanks so much for joining us with all of those details. Aditya, coming to you, PI Industries is the stock that you've picked out for us. Tell us, what are you spotting on the charts for this? Because for this stock, because last 3 months it's done decently okay for itself. Up 6.5% is what we are seeing. YTD, the stock is absolutely flat. Last 1 year also, the stock has not done much. Tell us, what are the next key levels to watch out for?
So I think Snake stock can easily test levels of 3,900, about 4,100 on the upside. The chemical stocks are looking up and above. Finally, there is up move in these stocks, and PI Industries being one of those stocks which had underperformed big time. But last few weeks, the stock has done well for itself. So I think at current levels, one should definitely look at entering the stock with a stop loss somewhere around 3,600, and look for a target of at least 4,000 on the upside with an intermediate hurdle at 3,900, which I think can be easily taken out. So 4,000 to 4,100 are my targets. 3,600 is a good support area. Again, RSI has moved above the 60 level and entered into the bull territory, which is a confirmation that there is strength in the stock and bullishness as well. So going ahead, stock will see much higher levels. So at current levels, yes, I'll be a buyer. Positives going on for the stock for a target of 4,000 to 4,100.
Right, that's PI Industries on the charts. But let's move to the next one, that's Phoenix Mills, Gaurav. It's an earnings candidate. Tell us, what does the earning look like for Phoenix Mills?
Well, yes, when we look at the earnings and when we look at specifically the numbers of profitability, we saw a sharp decline in terms of profitability as well as revenue. So there was a little bit of weakness. So let's understand the numbers. Revenue declined almost by 22% on a year-on-year basis, while net profit declined almost by 18%. Now this was actually a little below what the street was expecting. And as a result, when we talk about EBITDA, in absolute term, EBITDA declined almost by 10%, and EBITDA margins also actually increased almost by 700 basis points. But again, when we look at the numbers, those were actually little below what the street is expecting. On the other hand, when we talk about brokerages, they did not give any kind of pessimistic call. In fact, Motilal Oswal maintained its neutral stance, and a target price has been decreased to 1,672 rupees. What they're saying is that the occupancy in office portfolio has declined, but hospitality occupancy has risen. In fact, Nuvama maintained its buy rating at a target price of 1,907 rupees. But given that there was some weakness in the numbers, we are seeing a sharp decline of almost 8% in the stock today. So definitely watching out on this stock on the back of the Q4 numbers.
Okay, so that's the reason Phoenix Mills is in focus. A sharp downtick coming in on that stock today on the back of its earnings reaction. But Aditya, coming to you, let's keep it going with the real estate space. DLF is something that you've picked out for us. When I take a look at the charts, last 6 months the stock is lower by 13%. It's been trying to recover because last 5 days the stock is up 4.5%. But tell us, what's the outlook going ahead on DLF, and what are the next levels you're spotting?
The breakout that I see, Sneh, on the charts of DLF, it's broken out from a bullish cup and handle pattern, trading well above the neckline. And as we speak, stock is almost trading at the high point of the day. Good volumes going for the stock. At current levels, again, I think so. It offers an excellent risk to reward. It's a low hanging fruit. Go ahead, buy the stock for a target of 720 to about 760 on the upside. On the downside, 660 to about 670 is a good support area. So maybe place the stop loss just below 70, and at current levels look for a target of 720 to about 760 on the upside. Again, MACD, MACD and RSI both are positive and pointing towards higher levels.
Okay, so that's the next focus level, level to watch out for on DLF. Let's move on from that and talk about the auto stocks that are in focus today on the back of their monthly auto updates coming in, the auto sales data. It's been a largely mixed set of data coming in. On the CV side, the commercial vehicle has been disappointing. Only outlier was Eicher VECV. Two-wheelers, only TVS Motor did well, and maybe this pushed inventory to the dealer. Hero numbers have been impacted due to production halt. From the tractor segment, almost as per estimate, commentary was positive from both the key players in that segment, M&M and Eicher. And let's talk about PVs, which is your private vehicles. Tata Motors was the key underperformer. Maruti and M&M did well. So if you take a look at the earnings, the monthly update scorecard coming in, Escorts, Tata Motors, both CV and PV, Hero Motors and Ashok Leyland have done below estimates. M&M, the tractor segment, Eicher, that's the Royal Enfield segment, and Bajaj Auto. These three were in line with estimates, and what has beat estimates is the VECV segment of Eicher, TVS Motors, Maruti, and the auto segment of M&M. So that's a beat coming in on all of these segments of these stocks. But overall, mixed set of auto sales numbers coming in for the month gone by.
All right, mixed set of numbers coming in as far as the auto sales numbers are concerned. But Aditya, let me come to you. You forget Shriram Finance for us. Shriram Finance is is on the radar for a lot of techies. But tell us, what's your take on the charts for Shriram Finance?
It's looking weak, Ankita, and I think there could be some bit of a selling pressure added on in the stock going ahead, on the verge of a breakdown from a trendline support. So it's more of a conditional sell if the stock starts to trade below 595, 596. These are immediate support levels. Then I think stock can further weaken to levels of 580 or 560 on the downside. At the moment, it's just on the verge of that breakdown from that trendline support on the downside. And plus, if you take a look at a couple of days back, the stock did witness a sell-off on massive volumes. And plus, RSI has also moved below the level of 40. So that tells me that there's weakness in the stock and that is likely to increase in the coming trading sessions. So if you already have the stock in your portfolio, maybe you should place a stop loss at 595, and below that look to exit the position. If you're looking at fresh shorting the stock, then it's a good candidate to go short for a target of 580 to about 570 on the downside.
All right, a shorting call coming in on Shriram Finance there, but let's move on to the next counter. That's PNB Housing. Now, PNB Housing shares were sharply higher in early trade today after a big block deal that came in. The block deal saw 1.73 crore shares change hands. The indicative price of the block was 960 rupees per share, which was a 5% discount to the 1010 rupees per share close on the 30th of April. On the back of that big block deal coming in, PNB Housing is in focus today, trading up 4% in trade.
That's the reason PNB Housing is in focus. Block deal is the reason for that. Aditya, coming to you, Paytm is a stock that you picked out for us. Next week, numbers are also going to come out. But on the charts today, Paytm is lower by 3%. Last 6 months, it's up 11%. YTD lower. Last 1 year, however, has been very, very stellar for this stock, the kind of recovery that we've seen. Do you believe that despite the recent blips and the volatility the stock has seen, this could continue going ahead? I mean, this 1 year performance that we've seen, could it be mirrored for this year as well?
I think the stock will see a downside tick first from here on. Looks a little wobbly for the stock going by the chart setup. There is weakness that is coming in. There's a breakdown again from a trendline support. On the downside, I think stock can easily test levels of 790 to about 780 from here on, and maybe the test levels of 780 on the downside. That is when it can consolidate, and then we'll see further what is the position or what is the trend for the stock. At current levels, I think stock is weakening further and can test levels of 780, 790 on the downside. On the upside, it has a resistance close to about 850 to about 860 on the upside. So till the time it crosses above 860, I don't see any reason to go long, or maybe if you already have a position in the stock, it's a better idea to exit at current levels, look to buy lower on declines, because at current levels looks little overbought, and negative divergences are also there. So overall, the trend looks little weak for the stock.
Okay, so buy on dips is the strategy coming in on Paytm. Let's move on and let's talk about NMDC, because state-owned miner NMDC has raised iron ore prices by 440 rupees per ton. This is effective May 1st, which is yesterday. The price of the Bela lump has been revised higher by 440 rupees per ton to 6,440 from 6,000 back in January this year. The price of Bela fines has also been revised higher by 440 rupees per ton to 5,500 from 5,060 rupees earlier. Positive news flow coming in for NMDC, because this is the first price hike coming in the last 4 months from the miner, so looking good. And big jump is what we had seen. It was a gap up open for the stock, but it has fizzled out quite significantly from the day's highest point. Nonetheless, it's a 1% uptick coming in on NMDC as we speak.
All right, that's NMDC on the back of that news float, up 1% in trade. Coming to Rabinder, NC is the name that you picked out for us. With order win coming in there, take us through the details of that order win.
Well, as NCCC has received order valuing rupees 1663 crore during the month of April 2025. Out of this order, 1082 crore relates to building division, 581 crore relates to transportation division, and these orders are received from the state government agencies, private limited company, and does not include any internal orders. So back of this stock is up 1.5%.
Okay, so that's the reason NCC is in focus. Aditya, Tube Investment is the chart that you've picked out for us. Tell us what are the next levels that you're spotting on the charts.
I think it's just the start of an up move for the stock. Last few trading sessions, we have seen the stock gain momentum on extremely healthy volumes. RSI is also perched up and trading above the level of 60, entered into the bull territory. It's on the verge of a breakout from a W bullish pattern. And once it does so, I think stock is poised to test levels of 3,400 or 3,600 on the upside. Immediate resistance for the stock is somewhere around 3,000 to about 2,950. That happens to be the neckline of that W pattern that I'm talking about. Once it crosses those levels of 3,000, I think stock will have a relentless rally all the way to levels of 3,600. And one should keep the stock in the radar. Buy at current levels. The indicators are suggesting bullishness. The volume pattern is suggesting a breakout is on cards, and you should hold on to it at least for some time till you see levels of 3,500 or 3,600 on the upside.
All right, that's Tube Investments on the chart. But coming to you, Gaurav, we picked out a banking name, Kotak Mahindra, which is set to report its Q4 earnings. Tell us what to expect from the earnings for Kotak.
When we talk about Kotak Mahindra Bank now, there are two things which have already happened. Now, RBI has lifted its embargo on credit card issuance and online customer onboarding, and at the same time, Kotak Mahindra Bank also acquired portfolio from Standard Chartered. And as a result, these things are going to push the advances growth somewhere in the range of 15%, while deposit growth is also expected to be somewhere in the range of 12%. As a result, when we talk about profitability now, net interest income is expected to increase somewhere in the range of 7%, while profitability can actually decline a bit, almost by 12% on a year-on-year basis, but we may see an uptick of around 10% sequentially, because in the same quarter last year we have seen provisions for a little low, and that is the reason why profitability may see a little bit of dip. But on the other hand, when we talk about the net interest margins, they are expecting net interest margins to remain same. Somewhere we may see a little bit of decline of around 4 basis points, but more biases to positive surprise in the net interest margins front. There are no concerns in trajectory, and any kind of loan book growth outlook is something to be watched out for. As a result, when we talk about stock, it is currently under pressure, but definitely decent set of number is what we are expecting from Kotak Mahindra Bank.
Okay, so expecting a decent set from Kotak Mahindra. Let's move on from that. And Aditya, Berger Paints is the stock that you've picked out for us. Tell us what are the levels that you're spotting on the charts for us. Last 3 months itself, the stock is up by almost 12 or 13%. Do you believe that this is sustainable going ahead as well?
Oh, absolutely, Sneha. I think, in fact, this is one space which has underperformed big time in last few years, and this year looks like it's the year of the paints, and especially Berger Paints, if I can talk about. On the downside, again, stock has taken support at the 20 DMA, which is closer to about 540 odd levels, and from there stock has inched higher. Today's trading session, we are witnessing excellent volumes for the stock as well. The stock is backed by good volumes as well. So on the upside, I think the stock test levels of 600 to about 640. Given the fact that stock is only trading at 550 right now, it offers an excellent risk to reward with a support at 540 odd levels. So 540 and below should be your stop loss on the upside. 600 to about 640 should be your target, and you can see a decent bit of an up move in the coming trading session.
Okay, bullish call coming in on Berger Trains, 640 is the next level to watch out for. Let's talk about NTPC Green. This stock is also in focus today because the company has successfully commenced commercial operations of 75 megawatt of solar power capacity of the Ircon Renewable Power Project. This marks a key milestone in the phase commissioning of the 500 megawatt solar power project. The addition of the 75 megawatts brings the cumulative operational capacity of this IRPL plant to 225 megawatts with the commercial operation commencing from today. Now, remember, IRPL is a joint venture between Ayana Renewable Plant and ONGC NTPC Green Limited, a collaboration between NTPC and ONGC as well. The project is being developed in phases supporting India's renewable energy objectives. So part of this has been commercially operationalized, and on the back of that, the stock is up 0.5% as we speak.
All right, NTPC Green in focus on the back of that. But with that, we completely timed out in this edition of Market Fatafat. Aditya, Gaurav and Ravinder, thank you so much for joining us with all their stock recommendations, with all the stocks that are buzzing in trade. But with that, it's a wrap on this edition of Market Fatafat. But before we bid you adieu, there is a programming note. It's a big step in improving India's trade route. PM Narendra Modi has inaugurated the Vizinjam International Deepwater Multipurpose Seaport. That's worth 8,900 crore rupees. Now, this is India's first international deepwater transshipment project in Kerala. Now, the port has been built by Adani Ports and Special Economic Zone, India's biggest port developer and part of Adani Group in partnership with the government under a public-private model. Let's go across and listen into what the Minister had to say about this.
मैं अभी पोर्ट की विजिट करके आया हूं और गुजरात के लोगों को जब पता चलेगा कि इतना बढ़िया पोर्ट ये अदानी ने यहां केरल में बनाया है, ये गुजरात में 30 साल से पोर्ट पे काम कर रहे हैं, लेकिन अभी तक वहां उन्होंने ऐसा पोर्ट नहीं बनाया। तब उनको गुजरात के लोगों से गुस्सा सहन करने के लिए तैयार रहना पड़ेगा।
അദാനി വളരെ വേഗത്തിൽ
If you like this video, then like, share and subscribe to ET Now.